Will the price go up or down from here? This is one of the most important questions when you are making your trading decisions and when you're creating trading plans. And in this video, I want to help you understand how to analyze the price charts in a very effective, very simple way. And then you can come up with conclusions at the end to determine whether the market has a higher likelihood to go up or down. We are now on the 1 hour chart, but I want to start on the daily chart first to get an idea of what is happening there. On a daily chart, I just look for two things. First, I look for the most important support and resistance areas that are currently close to the current price action, which is here, the resistance at the top. You might have a support area at the bottom, but this is so far away from the current price that it's not really important. Then I also look for the current trending environment, and we can see that the market has clearly only moved up for the last 2 to 3 weeks probably. So we are overall in a very bullish market. However, the price just hit resistance. And then on the higher time frame, I ask myself already, am I more bullish, am I more bearish, or am I more neutral overall? And also what has to happen for me to get into a more bullish or a more bearish mindset. So when we look at this market overall, we can clearly see that we are currently a little bit more bullish than bearish. However, if we want to look for bullish continuations, I would definitely see the market break out and trade above this resistance area. I would not feel comfortable going long below this resistance, right? That makes sense. On a bearish scenario, I would first be a little bit more cautious. It's great that the market is trading at a previous resistance area. However, we need to see a little bit more momentum change here going on. And typically what you will do is you want to see that the market is taking out a daily wick. Why is this so important? Just look left at the current price action and the trending market. And during this uptrend, the market was never able to take out a previous low. When we look at the daily lows of the candles, you can see that this is 100% true during all of this uptrend. At no point was the market able to trade below a previous day low. So if we want to look for bearish scenarios, we clearly want to see that this is changing on the lower time frames. So now we have a very basic understanding on the higher time frame what we are looking for. At that point, I would go to the lower time frame and wait for one of the other scenarios and then look for trading opportunities based on breakouts, retests, pullback, or other confluence signals. And you can use the daily time frame whether you're a day trader or whether you trade the time frame such as the 1 hour or the 2 hour. Checking the daily time frame to get an idea of where you are currently and where big levels are is very important. And even for day traders if you trade on the lower time frames. What we see currently on the 1 hour is also a divergence, right? When we look at the price action, we can see that the market is making higher highs. But when we look at the RSI, which is the RSI 14 period, we can see that the RSI is making lower highs. So this indicates the market is slowing down and the uptrend is losing momentum. So now let's fast forward to see what is happening afterwards. One thing to look for is the sequence of bearish and bullish trend waves. And when we look here now at what has happened recently is that we see the market is strongly selling off. If you see a strong sell-off in a bullish market overall, this is a very big heads up, and this is something that could signal a change in overall market sentiment. However, we still need to wait for the market to take out this low. This is the daily low, and we want to make sure that the market is making lower lows. This is very, very important if we want to get into a bearish mindset. The bullish mindset is still in play unchanged. We need to see that the market is taking out this level, and then we look for bullish continuations. Now we have a very interesting event happening here on the price chart. The market is now making a lower high, right? We have our highest high here. The market did try to break out. This is now what we would consider a fake out. And then we have a lower high. This is a very, very important change in the market structure. However, the most important piece to the puzzle is missing, and the market has not been able to take out the low yet. So we have a support level here to the downside. This is also the daily low, and we need to wait for the market to take out this low before we get into a bearish mindset. This happened now just a few candles later. And this is the first bearish signal that we get. And overall, it looks really great. We have the divergence here at the top. We have the fake out. The market is not able to break out above this very important resistance level that we drew on the daily. We are making a lower high. We are making a lower low. And at that point, you could think about getting into a short trade. For conservative traders, you could put your stop loss above the recent high. If you're a little bit more aggressive and you want to push your reward to risk ratio, you could choose a closer stop loss. Target wise, we could zoom out and then look left on the price action, and we want to identify important support and resistance areas. So probably here's something important, resistance, resistance, and then turn support on the breakout. Here's probably some demand and supply in here. So those are some interesting first targets. You can see the first one already would give us a 2.8 and the second one a 5.6. So really interesting outlook. And now what happens is that we are trading with the higher time frame. We have identified the higher time frame bias. Based on the higher time frame, we have seen that this makes sense to look for a short, and now the lower and the higher time frames agree. So now the market is at the first target area. You can see the previous resistance that turned support on the breakout has been hit, and the market is now trending lower. Now the market would have almost made it to the second target as well. Another thing that I want to highlight is the blue line that I'm using here. It is the 30 EMA from the 1 hour time frame. This is a great trend following filter. I made videos about the EMAs in the past and how to use them in trend following strategies. Another thing that I want to highlight is the green and the red channel that you see here on the charts. And this is the previous day high and low. So this takes the daily high of the previous day candle and the daily low of the previous day candle and just plots them on your charts. And what you'll see is that during an uptrend, like what we have seen here, the market is typically not able to push into the daily low. So the market is failing to reach the red channel, and the market is pushing into the daily highs in the green channel. This is how bullish trends evolve. And then on the opposite side, the market is now trading into the red channel, which is the daily low, and it's failing to reach the daily high. It's another very important trend filter and a great trend following trading tool. You can see shortly afterwards the market would have hit even the previous support level. That's the one that we identified on the daily chart. You can see the trend was continued in the regular fashion. The market didn't reach the daily highs. The market continued to push into the daily lows. And also the price stayed below the 30-period EMA and confirmed the bearish trend structure. So you can see this is a very great, very effective, and also very simple approach to come up with trading plans on the higher time frame and then look for trading opportunities on the lower time frame in that direction. Let's do another example. And what do you think? Will the market go up or down from here? Pause the video and think about it. So let's break it down. What we do have here is a distribution. The market has moved sideways for quite a long time. And distribution phases are periods of equality where the market participants are currently in an equilibrium. You have pretty much the same amount of selling and buying interest as this leads to this sideways period. However, if you see after such a long sideways phase, the breakout is really important, and in which direction the breakout goes, this can often foreshadow long-term trending moves. So in this case, you can see that the impulsive wave out of the distribution breakout is bearish, and this could set the tone for more bearishness to come. Obviously, this doesn't work 100%, but it is a very, very first important signal that we can use for our analysis. What we have is an impulsive wave. In a short period of time, the market sold off very, very aggressively. And then we move over into a consolidation, a time where the market goes sideways. What is the difference between the consolidation and the distribution? First of all, a distribution is much, much longer than typical consolidations. Distributions are also much more volatile, so the market moves up or down much more than during a consolidation. So consolidation is just a pause in an overall trend, whereas a distribution or accumulations often lead to trend changes and often create long-lasting trending environments. So this tells us that overall, it seems to be more likely that we are in a bearish environment, and this makes the likelihood for continuations more likely. At this point, it's also important to know that we are still stuck in the consolidation, and at that point, I would not recommend to just blindly jump on a short trade. You still want to make sure that the market is taking out the lows. Why? Because if the market is taking out the low, this is typically used as a breakout entry signal. As the market is still in the range, the back and forth can easily take you out if you get into the trade too early. I'm sure you've all been there. You get into a trade too early, and although you may have picked the direction correctly and the price would have moved into your favor, you were taken out by a lot of short-term volatility. You can avoid this very easily by just waiting for the market to clear the consolidation. This happens just a few candles later. We have a large breakout. The stronger the breakout, the better the signal usually is. You want to see that the market is taking out the lows with a lot of force. And then afterwards, you can see the market continued in the same rhythm. We have a strong impulsive wave, the weak consolidation, strong impulsive wave, weak consolidation, strong impulsive wave. This is the typical rhythm of a trending market. And so I hope you learned something, and maybe you were even able to guess this right. And if you like this format, if you like this way of analyzing the markets, let me know in the video description below. If you're interested in this way of trading, and if you want to learn more about how to analyze price charts correctly top down with multi-time frame approaches, and also learn how to day trade, then take a look at the Tracademy. The link to my latest trading program is in the video description below this video. And this is the ultimate all-in-one trading education program that I wish I had when I started trading 17 years ago. It combines a brand new trading course with 80 videos, and every week I'm adding new videos. There's also mentoring, so you get mentored by me directly. I have bi-weekly trading webinars, and there's also a great trader community behind it. As I said, you get personalized mentored by me. I'm not using other coaches, I'm not using other educators. You're always interacting with me directly in the Tracademy program. I have also created brand new trading strategies that I'm trading and that I've never shared anywhere else before. The Tracademy offers swing trading, day trading, and it pretty much covers all the different time frames. So no matter what time frame you prefer, you will be able to learn to trade those in the Tracademy. There's also a private community which you will be able to join when you join the program. You can interact with me. I'm active daily in our community. You can chat with me, you can ask me questions, and I will always be available. The traders that we have in our group have already seen great achievements. Some traders have become funded, like here in this case, Justin, who passed phase 1 and phase 2. And this works for Forex, commodities, crypto, and indices. You can join the live webinars, which I'm holding every 2 weeks, and also every week, by the way, I'm sharing a new watch list where I provide a new video where I break down the current state of the market, show you the most interesting price charts, and help you to create trading plans. There's even a certification program waiting for you. Check the link in the video description if you want to see the full course syllabus where I break down all the different modules, and you can see what awaits you in the course. There's also a current special, so if you want to benefit from our welcome discount, there is a discount code waiting for you, and you can save a bunch of money as well. I look forward to welcoming you in the Tracademy.